Hey, what's going on, my friends? It's your man, Adam A. Spencer, here with another dividend portfolio update. Here on this channel, we are contributing $25, $5 every weekday into our M1 Finance Dividend Portfolio. As you guys can see, we are down currently over the past day 1.36%. Over the past week, we're down 2.73%. Over the past month, we're down 1.56%. One quarter, we're down 4.36%. The past year, we're down 13.25%. And all time, we're down 8.14%. That gives us a current value of $2,255.79, which, of you can see, our market gain is actually negative $202.02. Where our earned dividends is $82.39. When we subtract our earned dividends from our market gain, that gives us a gain of negative $119.63. So yes, our dividend portfolio is also down a bit, similar to our growth portfolio, which we had that update yesterday. And, the overall stock market continues to perform incredibly bad. I have the S&P 500 pulled up here, and you can see right now over the past year, this is the worst it's been, similar to what we were back in May before that little run up. That little, I call it a pump fake, a little fake out. They wanted to fake people out, make them think this was the bottom. Nope. I believe we haven't seen the bottom yet. I believe things are going to continue to get worse this month in June, and we will continue or start to either reverse or continue to run up starting next month in July or the end of this month. And I think, July and I think August, I believe, will be good months and won't be as bad as things have been over the past, 6 months, basically. Because all 2022, it's pretty much been downhill. And this is a downhill trend that we're in. You can see it better from the 5-year chart where it's been a downhill trend. And I believe, support is coming at one of these high points that you can see like back here. I believe it's going to go down potentially to 3,500, or we'll see support in this like 3,700 range. So I think it could potentially go down another 200, maybe 400 points, which is quite a bit. But it just doesn't look like things are going to end going down right now. But I think it's coming like next month or the following month. So I'm saying it here first. I believe we're getting close to the bottom, but it's not there yet. And that's why, things have been kind of plateauing and been really kind of choppy, not running up like we were doing, like a year ago and stuff. But instead it's kind of plateauing and it's been very choppy. And that's what you get, especially with kind of value-based companies, stocks that are proven, that have been able to withstand these bear markets. But it's going to be hard for it to grow still in these conditions. However, with our strategy, we do have a dollar cost average strategy where no matter what, we're continuing to invest every week. So when we look at our portfolio, we do have some companies who are in the green, such as Coca-Cola, who is up 27.30%, PepsiCo up 23.06%, Johnson & Johnson up 12.63%, Newt up 9.64%. Realty Income, our second REIT, which Newt was our first REIT, and Realty Income Corp is up 9.58%, and Procter & Gamble is up 8.19%. In the red, however, we have Verizon Communications, who is down 3.31%. JP Morgan Chase down 28.87%. 3M down 31.19%, and Innovative Industrial Properties down 48.85%. So, hey, in our portfolio, the stock that is getting hit the most is the one that's in an industry that isn't necessarily fully, legalized and whatnot. I'm talking about that plant, that green plant, Innovative Industrial Properties. Invest in real estate property that works with those type of businesses. So this is a good long-term play, right? It's not fully legalized yet. And I'm talking about that green plant. It's not fully legalized yet. So it makes sense that these type of plays, stocks that are in that industry, are going to be negatively impacted when the overall market's doing bad. And especially if it's in an industry that's not fully regulated, not fully legalized. So I'm not selling. I look at this kind of like how we are up here with Newt and Realty Income, that it's gonna be a good real estate REIT company to invest in years to come. Not to say it's not good now, but it will fully develop and we'll see our returns in years to come, I believe. So, we're not panicking right now with this current market. And if anything, I look at this, as I always say, as a great opportunity to buy the stocks that I want at a cheaper price. And this is just giving us that chance to accumulate more and more shares of these dividend stocks, these stocks that are paying us dividends every month or every quarter. And when we dive into our earned dividends, and you can see who's paid us the most. Well, you have Newt, our realty, our REIT here at the top, who's paid us $20.38. Then we have Verizon Communications, who's paid $9.27, followed by our other REIT, Realty Income, $8.71%, and 3M at $7.50. So notice though, you're seeing Realty Income, 3M and Verizon, as well as two REITs that have paid us the most in dividends. And when you look and see, who are some of our worst performing stocks, well, you have 3M and Verizon down at the bottom. So sometimes you got to look at like a compromise. Yes, the stock price might be getting hit pretty badly, down 31%, down $3.31%. But they've paid us quite a bit in dividends, so that helps to compensate for how much it's down. And IIPR, Innovative Industrial Properties, is our newest stock that we added to this portfolio. So, we added them probably at the worst time, in which now you can clearly see we're down the most. And since they're the newest stock in our portfolio, we've received the least, probably the least number of dividend payouts from them. From compared to others. So it makes sense that they weren't too high on our list. And when you jump and look at our activity, you can see we've only received for this month of June dividend payouts from one company, and that is Johnson & Johnson, where we received $1.41. So as a whole, we're down quite a bit, 8.14%, which is $119.63. However, this is still not that bad compared to the overall market when you look at how other portfolios are doing, especially growth stocks. And our growth portfolio is getting hammered compared to this. So this is not bad. And again, I believe in every company we have in our portfolio. So we're not changing our strategy. We're not changing our plan. The market might continue to go down for another few weeks. And yeah, my prediction could be wrong. Maybe it goes down even more in July. I could be mistaken, though. I don't know. Either way, I'm not changing my plan. We're going to continue to invest. This is not a portfolio we need anytime soon. We don't need this money over the next few months, over the next year. This is money that maybe, it's going to be for a gift for a family member, my mother, something like that. Maybe I'll use this for a family vacation or something, surprise people in my family. I don't know, but I don't need this anytime soon. And this is money that will go towards either, again, an investment or, I'm going to splurge and treat myself at some point down the road. And that's what this portfolio is going to be for. So I'm not panicking. I'm not selling. I'm just holding diamond hands, baby. That's what it's all about. And just continuing to follow through with my strategy, which is a dollar cost average strategy, and just investing $25 every week, regardless of how the overall market is doing. So I hope you guys found this video helpful, motivational, encouraging. If so, definitely smash that like button and subscribe to the channel. Hit that notification bell so you can stay up to date on all of our latest and upcoming video content. But all right, my friends, you already know what it is. I gotta keep it moving, but I'll see you in the next video. Peace.